Hello everyone and welcome back to another market review. This is Silunt. Today we're taking a look at the NASDAQ December contract for 2025. And again, we're starting off with the weekly chart. If you remember from the last video, I had this fair value gap drawn out on the weekly chart while suspecting that the low of the week had been put in. And it was great to see that. Going into today, we left that gap open. Price did not create a lower low than Thursday. And in fact, we traded up off of the low and closed the week above half of the weekly range from last week. So we opened the week here, we rallied up, dropped lower, almost completely rebalanced the high from 2 weeks ago, just missed it, and we pulled up off the low and closed above half of the previous weekly candle. On the daily chart, you can see that, how we rallied up during the week, created that short-term reversal with this intermediate high, drop lower, we open here, rally up, test this candle, and sink lower, back into our daily buy-center balance here. We come up off the low, we open, rally up, testing that wick and this wick, trading lower and overlapping that daily buy-center balance, and dipping into the lower one, and dipping into the upper quadrant of this large wick. We rejected off the low, and we pulled up and closed the day there. Price opened today and dropped down into Thursday's daily wick constant encroachment at 529 and pulled off the low and closed. Notice how the bodies stayed above half of that daily buy-center balance so far. We traded up and closed to end the week. My initial expectations going into next week would be to see if price can have any sensitivity at this small volume imbalance here from the Thursday open. There's a little bit of a gap in price there, and if we can rally up into that and start doing a rejection, my expectation would be to see again a candle body laid down across this range on the downside. So I would be looking for a bearish candle to overlap this range to make this a little bit more efficient. The thing that would prevent me from expecting that would be to see price open up through this level on Sunday and then start trading through the Thursday high. It would give me suspicions that maybe the low would be in for now and they'll just want to push and do one more all-time high before doing anything more significant to the downside. So going into next week, if we open up, reject from this daily volume imbalance, I would like for it to drop down into this buy-center balance here and get a closure, and then potentially start making our way back down into this imbalance range where this volume imbalance is here. So the main thing is to see if price can open, create a down close candle, and see what price does from this range. My first expectations, if that would be bearish, I would like to see price roll through the daily buy-side imbalance here, again, that's shaded in purple, roll on top of 529 and start making its way down to 372. And otherwise, if we gap up and start using this as a support level, obviously these smooth highs would be the target. On the 4-hour chart, we can see how price respected that sell side imbalance, and we drop down into our daily buy side imbalance on the 4-hour. We open up, rally, drop down, we open up, drop down and then rally. So price begins marking time inside that daily buy-side imbalance. Kind of what we expected going into today. It was a Friday after a large, there was a lot of opportunity all throughout the week this week. So anyone who didn't make money would be trading on Friday and kind of just chasing price just to try and make that extra few bucks for the week. And that typically is indicative of a Friday that will grind traders down. All this movement that they missed, they're going to be trying to catch something going into the end of the week. And if they're not equipped to see that price is likely to stay inside of the previous day's range, they'll be expecting to break out below here or trying to get a breakout above these highs, which neither of those scenarios came to fruition. We opened in Asia, consolidated a little bit, spent a lot of time on top of the constant encroachment of that daily buy-side imbalance, spent a lot of time wicking below the 50% range, and then finally trades up and into this 4-hour SIBI. And then right at 10 a.m. we sell off from that range and retest Thursday's daily wick constant encroachment, and we pull off of that low strongly and close above the daily buy-side imbalance high. And then the very next candle going into 2 o'clock, we just drop down a little bit, rebalance this high, and then trade higher. So price spent a lot of time rejecting the constant encroachment of this level and heading towards this 4-hour sell-side imbalance. Again, that idea for bearishness can be seen from the higher time frames by this range here. Pretty much this sell-side imbalance overlaps that daily volume imbalance that we were looking for to kind of poke into and then start rejecting. But at the same rate, if we have signs that this is in fact a more significant low that would need to deliver to highs, we would be utilizing that 4-hour sell-side imbalance here as an inversion array to send us higher into the balanced price range and this liquidity here, and then ultimately another all-time high. So I'll be utilizing this 4-hour SIBI going into next week, whether we be bullish or bearish. If we reject from there, my expectations will be down into 372s as the draw. On the hourly chart, I've included the last 3 days of price action. You can see how we had such a large range day on Wednesday and Thursday that it makes sense that we kind of chopped around on Friday and invited that seek and destroy aspect of price to come to fruition today. Because it's been such an expansive week, there's been very nice price moves that a lot of people in our fold could take advantage of, and they set that trap on the Friday to get people to get their money back into the marketplace. So hopefully you were able to avoid today, or at least take small scalps out of the market to get your fix. You can see how price consolidated on the hourly chart. Even after the close yesterday, we opened here and then immediately it started trickling down, bounces off of this opening price here, comes back to the high of the daily buy-side imbalance, drops lower, takes out the low, accumulates at the constant encroachment of the daily buy-side imbalance and our midnight opening price. They send it higher, going into New York, then 10 o'clock flatlines it, just takes out everything from midnight and London, and then towards the end of the day after lunch, we just rampage right on top of that same range that we put into the downside and take out anyone who left their short position on too long by pairing up their order here. So smart money shorts, buys back, and then offloads their buys with the liquidity there. On the 15-minute chart, we open here for our new day opening gap. Price rallies towards the high of that daily buy-side imbalance and then trickles lower. Grinds down all throughout Asia, and then market wakes up at midnight. We get a nice push, consolidation, and then trade back lower, swiping out those lows. So all of this kind of action in London is signaling to us that maybe today is in fact going to be a consolidation day or seek and destroy profile. And I say that because we swipe out the Asia range high and the Asia range low in London. Then going into the pre-market, we don't take out any liquidity. We leave all of these lows here intact. So as it's rallying in the pre-market, going into the New York Open, it's suspect. This rally is a suspect rally. Takes out Thursday's lunch high and rejects harshly, whipping down below our new day opening gap. Then as we come into 10 o'clock, we take out rejection block here and then sink it lower, taking out all of that liquidity from the pre-market and Asia and midnight with a more significant looking drop. Every time price poked under the sell side before, it's only been with wicks, and finally we get some bodies to slam under there and get people trapped in short with this movement here. So people who didn't take advantage of selling up here and take profits down here, they're going to be chasing it as a price retraces. They're going to be chasing this as a selling opportunity. Price does sell off from this range and rejects from the low of the daily buy-side imbalance here. Notice how the bodies stay cleanly right at the low of that daily level, and we reject from that. So seeing this as a selling opportunity, we drop down. Price should have continued pushing lower on this candle for a new low, but it didn't, and instead it rails right on top of that selling entry. So anyone who shorted here, it was brought down, gave them a little bit of profit, and then it railed right on top of them again. So they're back at break even. And most likely, if they're not getting in line with the market turning its tide here, they're not going to take their trade off just yet. They're going to see if it'll drop one more time. And it gives them that red herring. It attempts to trade lower one more time, but in fact, this is a buying opportunity now because we nullified the sell with this up close candle, and then this retracement down would be signaling a bullish opportunity. Price catapults right on top of all those traders who were caught short, and then does not give them opportunity to get back out at break even. We respect the new day opening gap and begin grinding higher into those highs where previous shorts were had. It kind of builds in that idea that, hey, we traded all the way back to your entry, but maybe it's going to break down, and then it doesn't, and then it goes into consolidation. Maybe it's going to break down, maybe I'll get profit, and it never comes. Those who held on to this position too long are just grinded down, and then going into the end of the day, it would have stopped them out or left them a position on over the weekend with this high. It almost poked into there and missed. So that's kind of why I'm suspecting that Sunday will just push up into there, take out that liquidity on a more significant basis, and then reject. So people who left their positions on over the weekend, if they're not ready, they'll be stopped out, and then price could go in their direction. But the positions that were held here, they never got anything lower than Thursday's daily wick, constant encroachment. So price rejected here, traded lower, and then reversed here and kind of killed everyone who was trying to hold for a longer short position. And then this consolidation also grinds down everyone who was capitalizing on longs and expecting a breakout here. So they got grinded down until the end of the day and didn't get to see too much more profits than what they got. On the 5-minute chart, we can see that consolidation a little bit better. And I also would like to take the opportunity to speak on what I was seeing in that execution video that I posted with the short. So again, Asia, we open at midnight, price trades lower, and then rallies, taking out the Asia range high, consolidate here and then break down during London, and then London heads towards the lows from Asia and then takes those out. We rally back up over top of this up close candle. Price spends time accumulating at the midnight opening price and this down close range of price here. We rally up going into the pre-market of New York, and then right before the New York open we get a nice rally. Price rejects that, and then just before the open we start dipping lower. Going into 10 o'clock we do all this consolidation price action here while leaving these lows intact. So going into 10 o'clock, my expectation was to see a consolidation today, and price had pushed up above our 680s level multiple times, where I was suspecting price to try and hold down from. I didn't want to see much higher than that. So as we're rallying here, I'm watching this volume imbalance as a PDA rate to key up on, and this sell side liquidity as a target. I take my short entry on that volume imbalance here, and price cascades lower, does a balanced price range over top of the breaker here, and then sells off, almost taking out that wick in this candle. The very next one we open up and then retrade to the new day opening gap, reject from it, finally get under those lows. We put in an up close candle, one more selling opportunity before price cascades down into Thursday's daily wick constant encroachment, as well as this Thursday buy side imbalance from the 15-minute chart. We have a strong response from those lows, which kicks us back into gear like, hey, this is a consolidation day, so you need to be suspect of this high because price is in a consolidation and we took out sell side liquidity. So retracing like this, if we don't break down significantly below the low, we're going to be falling back into consolidation. We spent time here. This is when price should have cascaded lower if it was going to create a new low on the week. We failed to do that. Instead, price respects the daily buy side imbalance low with the bodies here, rallies one more time, and starts closing above the previous swing highs bodies with its own respective candle bodies. So after this happens and this range is overlapped, the new drop down here is a buying opportunity where we would key up with the Thursday buy side imbalance high in the lower quadrant of the daily buy side imbalance, and then price rallies to the high of that daily BISI high. We respect the new day opening gap to the upside now, and then start grinding up and chopping up any of those traders who are trying to capitalize on the final hour of the day. Again, trading on the final hour of the market open on a Friday after a large range is the last place you would be expecting a large move to happen unless something out of the ordinary is going on the global front. So typically after a large range and a lot of price movement for the week, the final hour on a Friday, the final hour of the week is going to be lackluster, and we can see how that played out, just grinding out everyone who missed the week and is trying to capitalize on a day like this on the final hour. Instead, we consolidate inside this wick and then finally poke above it toward the end of the day and close there. Dropping down to the 1 minute chart, there's not much that I wanted to add. I just wanted you guys to see the first presentation arrays and how they were utilized on today's range. We had a large buy side imbalance as our first presentation array for today. Price consolidates all throughout the open, and then going into 10 o'clock, we have an orange folder news. We reject from that off of the news and have a shift lower here and a significant drop down below our initial low of 930, and then going into those higher time frame levels. We see that nice rejection from those lows. Even better on the 1 minute chart, we drop down, consolidate here. This is where price should have broke down, but it failed. We rally instead, and then start respecting that Thursday buy side imbalance anytime we trade back into it. So there's multiple trades in here to be had on the 1 minute chart, even if you had missed this move. You could identify that this is likely a consolidation and just simply sell every opportunity we have to get into the first presentation fair value gap, and then just take profits towards the Thursday buy side balance and that daily buy side balance low. You have to identify where we are in price and what we're rejecting from to make that happen though. So if you're keyed up with the new day opening gap and the first presentation, you'd be a seller. Price drops down, and then recognizing that there's no low produced after your short opportunity, you could collapse in this range, and then as price begins to respect the high of this range, you could be a buyer here towards the first presentation array, and then take a short from the first presentation back down to that same level, back down towards the lows. But price doesn't give you the lows. Instead, they begin accumulating at the Thursday buy side imbalance high again. So that's telling you, like, hey, my short entry from this buying level is not producing a lower low than where I bought it from, or where I observed price react from. There's no more lows being produced here. So if price is going to respect this level, then we should be targeting the first presentation array again and these relative equal highs here. So identifying the back and forth that price is delivering during this consolidation going into lunch, we're able to appreciate where price is rebounding off of, and we get an insight on if price is accumulating for buys or sells based on if price continues to draw lower or is held in a consolidation like this. So again, it's bringing us back to a couple days ago when we were speaking on the bear flag idea. We have this kind of a pennant or retail wedge looking thing happening here, and by the simple fact of identifying that it's in a retail pattern, we're in consolidation at the lower portion of the current delivery on the day after swiping out sell side liquidity. Then if price is going to break out in an underlying direction, most likely it's going to be leaning to the upside because price is spending so much time under lows and at higher time frame key levels that are bullish. We see that breakout of this wedge pattern, and then price slowly grinds through the high of that first presentation fair value gap. We pop the top off here and start working inside these two imbalances from that 10 o'clock drop. We consolidate pretty much all throughout the early opening range of the PM session, finally getting a first presentation fair value gap in the opening range of the PM session, which does not get traded to and is left open as price does this drop going into the constant encroachment of our first presentation fair value gap from the morning session. Price trades to the halfway point of that range and rejects strongly and overlaps the first presentation array while taking out some liquidity, and we roll back on top of that range harshly and into this buy sign imbalance here. On this drop, price fails to create a new low here below the constant encroachment of the first presentation array. So again, we're identifying what's not able to be produced or put in to give us a bearish idea. So the only thing that we can lean on is more upside or more consolidation. And after this small rally here and respect to the first presentation right here, we do in fact see it waste time away through the end of the day after taking out this liquidity. Alright, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, don't forget to leave a like and a comment. And as always, don't forget to subscribe. I will see you all next week.